Hi, it's Carl Lishing, a licensed insurance agent, and today we're going to discuss what's going on with Medicare Supplement premiums going up. This is not a carrier-specific thing. It's industry-wide. I'm going to help you understand why it's happening. So original Medicare has two parts, Part A and Part B, and those have cost sharing. On my screen, you'll see here that in the year 2017, Medicare Part A had a deductible of $1,316 for hospitalization for each benefit period. That's now up to $1,736 in 2026. The skilled nursing facility copay for days 21 to 100 has gone from 164 to 217. That's also a 32% increase. And then the Part B deductible has gone from 183 to 283, up 55%. So for consumers are insulated from those deductibles because your Medicare Supplement insurance covers it. But since those costs are higher, the insurance company has higher claims, therefore they have to adjust their pricing to keep pace with that. That's part of it. But then there's also Medicare claims are at an all-time high and all-time frequency of which they're seeing large claims. So the utilization factors in the claims are also driving the premiums up. So that's what's going on. Now, as far as what your options are, if you want to change Medicare Supplement insurance plans from within the same company from one plan to another or from one company to another, generally it's subject to underwriting approval. So you got to be in pretty good shape to get approved. If you got major stuff going on, or if there's upcoming surgeries or hospital stays or things pending that are unknown, it's not likely that you're going to get approved. So Medicare Supplement plans, prior to the year 2020, I'd say the most popular plan was Plan F for people that were turning 65 and going on to Medicare back then. It covered all the gaps in Medicare. Now, starting January 1st of 2020, people that are turning 65 were no longer able to get Plan F. So that became a closed book of business. They were generally not adding new people to it. So there's attrition, like that risk pool gets smaller over time because people leave it for another plan or they go to a Medicare Advantage or they pass on, whatever. So the risk pool goes like this, and they're not adding more bodies to it. So that can sometimes cause renewal rates to be a little bit more volatile on a closed book. Plan G over here became the replacement to Plan F. You can see that it's pretty comprehensive. It doesn't cover the Medicare Part B deductible. And as mentioned, that's $283 this year. That adjusts with time. Plan N will have a slightly lower price than a G plan, usually $15, $20 a month lower. It does not cover the Medicare Part B deductible. And then after that, there's copays for doctor's visits at $20, emergency room $50. It does not cover what are called Medicare excess charges. In the state of Ohio, Medicare pays assignment, and that works that way across the nation. But in the state of Ohio, the carriers, healthcare providers have to accept Medicare assignment as payment in full. In a lot of states, they're allowed to bill what are called excess charges. So if the healthcare provider is not comfortable with the Medicare reimbursement amount, they can balance bill the member up to an additional 15%. So Plan N does not cover that Medicare excess charges. Most providers don't bill for excess charges, but they can. Some other lower cost options would be like high deductible Plan G. In exchange for a couple $1,000 deductible or so, you could have a lower monthly premium, so have original Medicare with a supplement, but more deductible exposure. A lot of people don't do that, but it's an option. Plan K and L over here, they tend to have lower pricing, but you're paying coinsurance until you hit your max out of pocket, and that max out of pocket is usually higher than the max out of pocket on a high deductible Plan G. So I tend not to do a lot of Ks or Ls. The main ones are going to be G, and then maybe like a high deductible form of a Medicare supplement. That's for people that want to stay on original Medicare with a supplement and they're healthy enough to make a move. If that's the case, we might be able to help find a lower premium. Now, the other option is what's called Medicare Advantage. You can move to Medicare Advantage only during the annual enrollment period, unless you have a qualifying event. That's October 15th to December 7th. What we just discussed with making changes on Medicare Supplement can be done at any time subject to underwriting approval. Now, on a Medicare Advantage plan, here's the trade-off. Monthly premium can drop to as low as zero. There are networks of doctors and hospitals to work within, so you want to make sure that if you're going to go this way, that we find a plan that works with the doctors and hospitals that you want to see. There are managed care programs. This is like commercial insurance where the doctors and hospitals have to coordinate with the plan to get prior authorization done. And then you're going to pay as you go on Medicare Advantage. So you don't pay it on the monthly upfront. Like a Medicare Supplement, you pay a higher premium to have the lowest out-of-pocket exposure. Medicare Advantage, you can pay as little as zero, but then you're going to pay as you go. But there's a high-end cap, and on this one here, it's capped at $4,200. So, for instance, if somebody was in the hospital, the copay is $350 a day for 6 days. On an outpatient surgical procedure, it's $250. At the hospital, $350. And you go down through the summary benefits, and you see like copays for doctors and copays for testing. This is pretty standard with the way they all work. The top products from the top carriers are all pretty competitive. We can help you navigate which one would be the right fit for you. Now, a good balancing act is to use like Medicare Advantage with a low or no premium, and then you get supplemental health products, and what they do is they pay cash benefits directly to you to help balance out these copays and things that could be more expensive on an Advantage plan. Now, those supplemental health products, depending on how we design them, they're usually between like $40 to $110 a month, depending on the person's age and how we structure the benefits. So you put that alongside of a zero premium Medicare Advantage plan, and the two marry up nicely and provide comprehensive coverage and can help provide some premium relief compared to Medicare Supplement and Part B and standalone dental and vision. So that would be a decent option as well. So if you'd like to schedule a time to shop out Medicare Supplement or discuss going to Medicare Advantage in the fall, please click on the scheduling link or call the office at 216-228-0765. Thank you. Bye for now.